All right, I'm joined by Mr. Daswa. Welcome to the podcast.
Thank you. Appreciate it.
Yeah. So please introduce yourself and what you do.
Yeah, look, I mean, as you probably might have seen the bio and the summary of,
Sure.
my career. So the work I do, it's around how do we empower, South Africans to retire comfortably and also to retire with confidence. And my job really entails, you know, people who are hardworking South Africans such as yourself and many others who says, they want to retire at some point and they want to retire comfortably. And how do you invest their money in a way that is prudent and also in a very responsible manner, such that they can retire in a more comfortable space. And by that, you work for a company, every month they deduct some money towards your retirement, and my job is to say, how do we slice and dice that money? If it comes to us, and we've got actuaries who are at the back, they can calculate and say, okay, somebody who's 28-year-old, 30-year-old, they're going to retire in the next 30 years of their lives, or in the next 25 years of their life. This is how much at least they should be investing, and what is their replacement ratio, replacement ratio simply means how much will it have to earn when you are retired, because you probably not want to change your lifestyle more or less. So how much do you think you need to have at that point in time? So in simple terms, my job, it really entails slicing and dicing that money and say, we're going to invest a portion of that money into listed equities, which is stocks that are listed in the JSE or listed in the New York Stock Exchange or NASDAQ, etc. Fixed income, which is bonds, cash, direct property, listed property, renewable energy, and that's pretty much the second part of what I do, which is over and above slicing and dicing, which is what we call asset allocation, is then how do we introduce investing that money responsibly, such that, as you do so, it also then empowers the community in which you and I live. So one day, when you retire, you're not going to buy a mansion in the Atlantic seaboard. You're more likely going to live where you are, but right where you are, there should be proper water, sanitation, transport. Your kids, if they go in the schools in the area, they should have decent schools. They should have, decent living environment. And that's the responsible investing part of it that I do. So it's sort of two-pronged, which is the asset allocation and integrating responsible investing in that process when you invest.
Wow. You're making me excited already about the podcast. So before we get to sort of dissecting what you just explained now, let's get to the interest. Yes. What did you study and what brought you to be interested in that course?
Yeah, look, I mean, I was just one of those kids that every time in high school, they'll come and say, study maths and science, because everybody must be like a scientist. But I just never understood it. And I wanted something different. But I think more importantly, what drew me into commerce and into finance and investments, which I subsequently studied later on, was on the basis that it's very dynamic. It changes every day. Today the stock market is up, tomorrow is down, tomorrow the rand is sideways, and derating, etc.
Sure.
And it's a very dynamic world. Everything intertwined. So because there's geopolitics that is happening now, there's local elections happening. There's, somebody, CEO being hired, fired,
and fired, sure.
Corporate activity happening. So that's the nature of it. It's very exciting. It's very dynamic. It changes every day. Tomorrow you are there. Something happens. Yeah.
Okay. Yeah. So now you are studying it. You didn't mention the actual course that you were studying.
Oh, my bad. So I did undergrad in finance. I did double major in finance and economics. And then after finishing undergrad, I further on to do my master's in finance. And then 4 or 5 years later, I went back to do another master's in economics overseas. So I have like two different backgrounds.
Two backgrounds.
I'm like a qualified economist,
100%.
but also like very much into.
So and I mean, this is high level masters and finance. So that means you sort of sorted in that regard.
Yes, correct.
So, because I actually wanted to ask, like, the, the background in order to do your work that you do.
Yes.
You need to have finance and economics, but I think I will ask that question later, right?
Yes.
So, what is it that you sort of, what can you advise someone who's actually doing finance now in order to sort of leverage their career, or maybe to be able to at least pass
Yes.
or graduate in finance?
Look, I think you've got to make sure that, to a greater extent, you get your majors right. So if you're doing pure finance or investments, those are the most important part for one to actually excel in this space. But I think more importantly, I'm not a big fan of people just getting marks and then they think they can get jobs. In corporate, people are looking to hire people that they can work along with. And I'm more interested in an all-round individual to say, yes, you've got good marks or you've got average marks, but your attitude towards learning is great. Your the way you carry yourself, the way you present yourself, those are things that matters. In corporate, they use the word that technical stuff we can teach you. We can take you to your course 100%. Once you have arrived in the company, but soft skills we cannot teach you. You need to have that. Hence, I think this concept of getting an all-round individual who says, yes, you are in high school, or you have just about to finish your honors in finance or your undergrad in finance. Ask yourself a question: are you somebody who can present themselves? Are you somebody who could, engage on concept and explain them in a very simplified manner? Are you someone who, handle themselves and, they've got a good rapport out there? They're not used for the wrong reasons.
Sure.
And I think it is for that reason that I think, if you are a student and you want to get into this space, just look at yourself as an all-round individual, not just as a graduate who's just going to have good marks and then they're arrogant and they don't have a good character. So that's my take.
Understand. I mean, that's excellent advice for those who are listening.
Yes.
To understand that to work on your character, you must have the soft skills that will help you to sort of become employable. I mean, I think right now there was something training about unemployable.
Yes.
Right? But I like that. I like that a lot. So you get to finish, you graduate. I'm sure in finance, there's so many things that you can sort of do. There's so many career paths that you can go. Did you always want to work as an investor, or did you had other ideas of what to do?
No, certainly not. I did quite a lot. So in finance and investing, you've got what we call front office, sort of middle office, and back office. I actually started at back office.
So what does those three things mean?
So let me debunk those. So with investing, I'll start with back office where I started.
Sure.
You've got there's different companies that does fund administration, right? So they administrate different funds. So if an investor is buying a share of, listed in the stock market, and then there must be somebody who literally punch those numbers to implement that and say, okay, look, this is the price of the stock.
Sure.
And, okay, this is how much dividends must be paid, etc. That's back office. So somebody who's doing the number crunching and whatnot, they pass those things to you. And then there's the middle office, which is very much operational.
So that means, sorry to cut you there. So does that mean that you work closely with the actuarist in the back office?
So the actuaries are in the front office.
Oh, okay.
Yes.
Okay. So you can continue there.
So I'm starting right at the end.
Yes.
And then right in the middle, you've got people that are doing like more implementation and operations, etc. And then the front office is people that are picking stocks. These are people that says, I'm gonna buy this mining company as opposed to this financial services company. The reason why I'm buying this is because I've done my valuation, and my valuation proves that I should buy it. So those are the smart people. And then even within that front office, you also then get people who does the high level slicing and dicing of the pie, which is now why I subsequently found myself in. So they do what we call asset allocation. They say, you've got R1 billion. This R1 billion must be invested 30% in equities, 20% in bonds, 10% in cash, 15% in property, in that order. That's what we do. We do like the high level, and then we give this to the stock pickers, the bright guys. So we work with the actuaries and the like.
Okay.
So. So with my career, it actually evolved in that way. I was at the back office administration, and I literally was there for 6 months, and I was like, I don't want to be here.
No, I actually wanted to ask, like, what is it that you sort of you learned from being in back office? Like, what are the pros and cons? How do you get out, and why did you want to get out?
Yeah, look, I think it breaks you. It gives you a lot of exposure because you sort of have a high level understanding of what men in the street get to see. So in my life, then we used to do the pricing of net asset values, which is like, you buy an unit trust that you invest all your money in. And that unit trust, every day, if you look at the newspaper, you will see that this fund net asset value is this much, the market value moved from this price to this price. This was the daily average.
Sure.
That's what I was doing the calculation. So if I'm an investor, I could see that every day. And so it gives you the feel overall, of what the end client should actually experience. And then I just feel like it was very repetitive. So you do everything every day. You know that there's a certain time you are pricing. This time you must be on you're doing the pricing, you're doing all the, dividends, distribution, whatever the case might be.
Sure.
And it was very redundant. Hence, in the 6 months, I was like, I think I need to pivot. I need to find something else. And
so does that mean that you moved companies, or you just moved into a different department?
I left the company,
okay,
which was in the back office, and I went back to school.
Okay.
And the aim was to say, I want to upskill myself such that at least I can, penetrate into the front office.
So which means in order for you to get into the middle office and front office, you had to add, was it an honors or what
Yes.
did you do?
So, by the time I was doing the back office work, this is like 10 years ago, actually. Precisely 10 years ago.
Okay.
I already had an honors degree.
Okay.
And I was just like, look, this thing doesn't work for me.
Sure.
I want to just rather go back. And the opportunity came for me to do a master's degree, which was fully paid, etc. And then I took it up. But I think one thing that I cannot stress enough is building relationships. People hire people that they know and they can work with. 100%. And I think people just think, I'm just going to apply everywhere, and it doesn't work like that.
100%.
I think to a greater extent, people want to, if you create and you nurture relationships.
Yeah, I think I like to concur with what you're saying, that there is a lot of mutual friends. Like if you have a mutual friend who knows another mutual friend.
Correct.
Oh, I wanted to use the word recommendation.
Agreed.
There's a lot of hirings that can happen because of recommendations.
Yes.
If someone recommends you, you have a higher chance of getting employed.
Agreed.
Yeah.
Yeah.
So I just said to emphasize
No, you're affirming exactly.
Sure.
That. Yeah. People recommend because they know the type of person you are and the attitude you have and
100%.
the skill sets that you have and the technical ability that you have. Yeah. And I think for me, that's how I was able to pivot and get out of the back office. And I sort of landed somewhere at the bottom of the barrel of the front office. So the front office is very big.
Okay.
You don't just suddenly get up there. And whilst I was there, again, I just look, I'm just like right at the bottom.
Inept, yeah, sure.
Yeah. And I think, it's also one of the things that when people get into their careers, they have to appreciate the fact that these big corporates, we get into them. There's two ways in which they operate. Within corporates or within companies, and even investments and any other industry, you've got a part of a business which is a profit center. It makes profit. It's the one that can keep the lights off. If that function is not there, everybody else is in trouble. Yeah, sure. And then there's what we call call centers. So all this back office administration and middle office, these guys, they're actually what? They're enablers. They enable the guys that are in the front office to do their work. Okay, do their work efficiently.
I understand. Yeah.
So you would agree with me that if you are then at the back office of middle office and you're at the call center, you sort of get the crumbs. You don't really get to be remunerated and well taken care of.
Sure.
As opposed to the people that are in the front office. But also in the front office, you could be at the bottom of the barrel.
There's levels, yes. Sure.
There's levels to it. And I think at some point in my career, I realized that to say, you've got to get closer to the past.
Sure.
Yeah, for the lack of better word, but not to maybe make, and I'm conscious to say this so that people don't interpret that like, you must chase money all the time. No, I think it's important for people to be aware in which way they are, because it also helps people with aligning their expectations. Here you are at the back office and you want the salary of somebody who's at the top end of the front office.
Sure.
It's impractical because,
work,
you are an enabler. You are not the one who's bringing the money for you to do what you do. And I think that's something that sort of dawned to me at some point in my career. Like, you've got to gradually move into a space where you can be the one who can bring profit into the company.
Sure.
As opposed to be, some function that just enables.
So I'm tempted. Okay, no. Before I ask this question,
Yes.
it's the levels in front end now. Do they have names, or you just say, okay, this is the back end, or
they do?
I just
have
want to know. I just explain for me who doesn't really understand.
So you get from the front office, and I'll sort of give you the career trajectory, which is more educational here, to say, when it comes to investments and finance, the people that are at the top end of it, there is what we call the chief investment officers.
Okay.
So those are the guys that they ensure that everybody else in the front office is doing their job. And because remember, it's all about philosophy and processes. So you say your philosophy is we are a value investor. We buy when the price is low and we sell when it's high. You stick to that philosophy and the process. So the chief investment officer is the one that ensures that that philosophy and process, it's actually people are following it diligently.
Sure.
Right. And then from the chief investment officers, there's what we then call portfolio managers. So there's somebody who's managing listed equity and a fixed income. There's somebody who's managing balance funds. There's somebody who's managing properties, listed property, direct property. Somebody who's managing hedge funds and all manner of things, multi-asset and you name it. Those are what we call portfolio managers, PM. PMs, they're the ones that then decide to choose. So the foot soldiers of the PMs is what we call analyst. So you probably might have, if you lived in the city in Cape Town, these guys, they wear chinos and brown chinos and blue shirts, and white shirts and brown shoes. You will see them when you see them.
Okay.
Why? I don't know how they do it. We all do it somehow.
Sure.
And those are the guys that are like foot soldiers. So they do the analysis of stock picking. They are the ones that grind the numbers, they build models, they go to speak to CEO of companies, and then they do the recommendation of which company must be bought, which one must be sold, and they recommend that to the portfolio managers. And then the portfolio manager is the one that makes the call. So we're going to buy this industrial company and we sell this mining company, and we're going to grow the portfolio in a certain way. And then you then have, like ourselves, who are like more, providing the asset allocation and say, okay, we give you the portfolio managers and analysts, go achieve this investment objective, but this is how you must manage the portfolio on the basis of slicing and dicing the money that you have given. Okay. And we hold you accountable to it. And then we also integrate responsible investment into the process.
So what do you call you're not an analyst?
I'm not an analyst, and I'm not a portfolio. So I'm a senior investment specialist. Okay. So I specialize more on the asset allocation and responsible investment. Yes. And then when you have now, this portfolio manager, analyst, senior investment specialist, actuaries are there on the sideline because they have to do the modeling of the different risks that can happen. They do simulation of different scenarios and say, okay, in the high road, if tomorrow, South Africa was to get a dictator president.
Especially now with the elections.
Yeah, so they run those different models.
Sure.
Yeah, and then they give us that types of insight. And then you get like research analysts, you get client services consultant. Yeah, those are people that are now providing the support to the rest of the team.
So does that mean that things like the NHI bill being signed, it affects what stocks, certain type of stocks?
Yeah, of course, hospitals, all these hospitals you see out there, pretty much the private healthcare system. It does get affected. But also it also then speaks to the ability of the government in which they're going to spend towards health as a specific sector in itself.
100%.
Yeah, so those are things we take into account because we then also look at, okay, to what extent will health then be a contributing factor to how much people live longer? Then actuaries need to model that and say, okay, if people are living longer, then their replacement ratio must be long. But if their retirement level age is 60, 65, and they live long, what else are they going to do? And will they still have enough money, or they'll still depend on the government?
Sure.
So those are some of
the different things within the
front
end office.
Yes.
Okay, so people like Ray Dalio. I'm not sure if you know Ray Dalio.
Who?
Ray Dalio.
No.
So Ray Dalio is an author of Principles.
Okay.
So he wrote a book about how to have principles.
Okay.
So it's a very interesting book. I'll actually share it with you.
Okay.
So the reason why I was bringing him up is people like Ray Dalio, Warren Buffett, these well-known investors. Do you sort of have to sort of like the things that have done? Charlie Munger, for example, are the people that you sort of, to become, as you're an investor, you sort of want to sort of channel their energy, or just love them as mentors, or just follow their career? Do you sort of do that? Is that the culture within the work that you do?
It's big, yes.
Okay.
There are people that went in Berkshire Hathaway's AGM about 3 weeks ago
Okay.
from SA, who traveled there to go and attend his AGM. You find like over 4,000 people in that hall that are attending his AGM. And I think most of them, and I've met a couple of them who have been there, and there are some who have been there for the last 30 years. Every year religiously they travel for the AGM.
Sure.
And they say it gives them a different feeling, how the company has grown in leaps and bounds, and their investment styles, and how they've been prudent all their lives, and also how they've not really been in scandals and hot waters for the wrong reasons.
Sure.
So I think, to a greater extent, I don't think people idealize them, but I think to a greater extent, most of them take, some of
the critical decisions that they made.
Some traits within those people, and say, look, Warren Buffett, every time he always have a Coca-Cola next to him. He drinks Coke all the time.
Sure.
There's a guy, one of the biggest investors, they call him the Bond King, called Bill Gross. Bill Gross, every day, he would wake up and have bowl of cereals, which is muesli and yogurt. He has been doing that for the last 40 years.
100%.
And he has got these cats, and that's...
So you sort of have to have a routine of some sort when you're doing this kind of work.
Yeah, I think it does. But remember, it's a game of conviction. Maybe let me call it.
You have to have your gut.
Yeah, you go with your gut, and you must stick with your gut and say, this is what I think it's going to be.
Sure.
And hence, some of them, whenever they don't perform well, it affects their confidence. Because now, if they were taking very big bets and saying, instead of buying 100 of these things, I'm buying 200.
So that's where conservative and aggressive comes in.
Agreed.
Okay,
yes.
Sure.
So you find that they were very aggressive. And then now, because they've been bruised, because they make wrong calls when others were buying more global shares, when others were buying a lot of local shares, and then global did very well.
Went up, yeah, sure.
Then now people say you have been underperforming, and they feel the pressure, and it affects their ego, it affects their confidence.
100%.
Hence, then it becomes hard for them now to take those active bets because they're like. So it's very psychological, by the way. There's a whole concept of behavioral finance, which actually says that one of the things that it talks about is what they call loss aversion.
Okay.
That you are prone to feel more pain of losing R1 than gaining R150. When you gain R150 if you invested in your stocks and it goes up by R150, you'd be okay. But the moment that you lose R1, you start panicking and you're like, what's going on? And I think it just shows that we are human beings. We are driven. Yes. And this is one thing that Warren Buffett has mentioned in one of his talks, that people are driven by greed and fear. And then, hence, people must know when to be bold and when to be conscious.
Yeah.
When do you become aggressive and when can you be more conservative? And it's just the concept. You do it on a day-to-day basis. You don't say
makes sense because with me, I've had a fair share on forex.
Yes.
So I'm not too sure if it's the same thing, but I think we'll get into forex, right? I have had a fair share of doing forex.
Yes.
Understanding that I can make money or I can lose money.
Yes.
And I actually went to an extent of actually going to a school where you sort of learn how it works. And they mentioned the same thing, that you need to have the emotional intelligence of knowing that let's say if you lose money, you don't fight to make money back because you've already lost money.
Yes.
If you have told yourself this is your routine in making money, if you lost that day, do fix it tomorrow. No, you don't have to fix it on that day because now you're sort of getting into a gambling and it's an emotional thing, like you are playing, like you're saying. So is it the same thing with you guys now, where we were talking about emotions, and do you sort of have to go through a training of some sort to understand yourself and how you do your work efficiently?
Yeah, I don't think it's a training of such, but when you study finance, it's actually there's actually a syllabus that speaks to behavioral finance. So they will talk to you about modern portfolio theory, which is, you want to get higher return for a given amount of risk, right? You want a higher return, but you don't want higher risk that comes with much of it. Yeah. But then that whole concept was then challenged as it evolved. Some people then challenged it and say, you know what, but we are irrational human beings. We are not rational.
Sure.
We are driven by a lot of emotions, We're driven by heading behavior. There's a concept they even spoke about. There's a guy called Daniel Kahneman. He certainly passed away not long ago. But Daniel Kahneman is actually one of the best authors in terms of behavioral finance. Sure. Daniel Kahneman is a Jewish fellow. And he wrote a book about it, and he was talking about this concept of behavioral finance, which is there specifically spoke about heading behavior. You know how ships walk. Okay. Ships walk as a head. It's a group. Yeah. So if they all jumping to cross the river, that's why most of them they'll drown. Because they see others are going. Sure. And as investors, they also do the same. So if you're talking with your peers and they tell you, oh, you know what, the rand has been trading at 18 rand 10. Last month it was 19 rand. Sure. I'm buying. I'm buying because my friends are doing the same. If you see your friend, they're like, you know what, this GBP pound, it's going down, man. It's going up. I'm going to start selling of this and get some profit. As investors, they are also driven by those emotions of heading. That all of them, because they're buying offshore equity, everybody tends to. Because now there's elections and everybody's conservative, everybody will be conservative. Yeah. So it's just a function of, it just demonstrates that we are very much irrational human beings.
On a deeper level, this is just outside of finance. Yeah. So I've just been listening to some different podcasts. They were saying the same thing, that it's funny how they were just talking about how on a deeper level human beings are connected. They were saying that if right now, let's say maybe the fastest man is Usain Bolt. Yes. All of a sudden, people who were on 11, let's say maybe the highest speed was 11. Yes. Now that we have Usain Bolt, people started becoming more closer to the 9 point whatever that Usain Bolt did. So he was basically saying that just because one person has done something, it makes it easier for everyone all of a sudden to feel like it's also possible. Yes. That's just speaking to the thing of like head mentality. Yes. If just one person just say that, okay, I'm going to do this, everyone just feels like it might be the right thing to do this one thing, which could be either detrimental or it could either work for you.
Yeah, it could work for you. So you can be what they call, there's another part of it that they call it a contrarian. So contrarian investor is that when everybody's going this direction, they go this direction.
Because it's a different one.
And I can tell you, because none of us knows what's on the other side.
100%.
You can get it right by being contrarian, but sometimes being contrarian forever, it's not going to always make you win. Sometimes everybody who's going on the far left, they can actually do well. Sure. So I think there's nuance to it. And these are not the concepts you get taught in corporate. 100%. These are things that should be part and parcel of your syllabus when you're studying finance and investments, but it also differs because, I better understood this concept because in my master's dissertation, I had to write a whole chapter about it.
100%.
A whole chapter on behavioral finance. Even if you check my master's dissertation online, you will find chapter 3 that just talks about finance theory, where I was debunking from 1954 Markovit's modern portfolio theory and how it has evolved to the early 2000s, when they spoke about, all these, arbitrage pricing model and momentum and all those and other things.
Well, that's so interesting, man. Let's get to philosophy, because I think that what we're talking about is also part of philosophy, because there are people who, it's part of their philosophy in terms of how they do their stocks. So this is where the conversation about finance and economics comes in. Do you have, number one, do you have your own philosophy? Number two is, how did the finance and economics background help you create your philosophy?
Look, I think I don't have a philosophy per se. I don't want you to live here and your audience to think, okay, this guy is like a scholar. He is good. I do not have a philosophy that I say I follow this religiously, right? I think as you move and as you evolve, you get exposed to different concepts and different things that you see. And we're also living in a very evolving world, right? In terms of, what I've come to believe is that you've got to always understand where you are. This whole concept of investing is really about a journey. It's not just about a point in time. So you say to yourself, okay, I want to buy a 2 million rand car in the next 5 years. So if I'm investing towards that, how am I going to be prudent and be diligent in following that over time? And how much of that can I then, not get swayed by something that can come along the way, and and I think with the finance investing, it actually exposes you a lot, because you see a lot of people who were successful and people who became unsuccessful, and those that were successful and they've been consistently successful because they've stuck in their process. And that's why I give you an example of Warren Buffett, Bill Gross. These guys, they are known. They are value investors. They've never changed it. Like Warren Buffett, it's like if you sit with those guys, you get indoctrinated to their ideas.
100%.
Because 100%. They said this thing has worked and you can't break it if it's not.
So speaking of that, maybe I'm not understanding maybe what philosophy is. That a philosophy, or is just an idea of how they do things? I just don't know.
So in the world of investing, it's called a philosophy. So there's multiple philosophies. So you get guys that are says we are value investors. Value investors say we buy low, we sell high. All right, we buy when the stock price is low, and then we want to sell it when it's high. How much low it is, we will determine that price ourselves.
100%.
Right. And then whether it moves up and down, that's how we do it. And then you get like some people that they call them pragmatic value investors. So they are very pragmatic. We can always shift things around. And then you've got guys that are quality. These are guys that are determining that this is a company that is quality. And then you've got a growth investors. They are just buying companies that are growing. They literally take everything that moves. And then the momentum guys that says, okay, let's look at, the fact that this company is just like on an upward trajectory. There's momentum that is driving this particular sector. And all of them,
different philosophies.
They have different philosophies. But what has been key is that you as an investor, you should never change your philosophy. Even if the value is out of favor and is not doing well now in this environment, you stick to that philosophy 100%. And your process and say, we know value is going to come back. We know quality and momentum, or we're using thematic investing, whatever. This thing is going to work. And that's why you get most of them that you call them, like you mentioned, they're high conviction, because they have to stick to their philosophy, and they say, this is our philosophy, we believe in it, and we believe that it's going to work over time. And it, remember, markets moves in cycles. It always reverts back to the mean. So if you choose a specific philosophy for yourself, certainly stick to it, and you must know that with high conviction it must work in different cycles. So if it's out of flavor at some point, you must say we will come back again at some point.
100%. So I think just maybe coming to the educational background where you did your master's in finance and economics, how did that help you now in your career? And I just want to see what is the turnaround for you for doing both economics and finance?
Yeah, I think finance gave me a very much theoretical part of, because it was a full dissertation, and it sort of made me to understand the theory behind investing and the different investment styles, how investors look at it, the different indices, and how stock markets operate, etc. Because that's what my desk. Imagine for 2 years you're literally writing about, and everywhere you go you tell people, because you want it just becomes your life.
Sure.
It literally becomes part of your DNA. Whether you are in the bathroom or you are in the kitchen, you're thinking about, I can draft this thing in this way. But ultimately, it gave me that fundamental understanding of finance and the different theories. I think the economics part of it, because I did it overseas in the global north, it sort of gave me a better understanding of, what are different corporates doing there. And more than anything, it was very much experiential learning. It was not just about going to class and then you do mathematical. It's very quant. It's actually highly high mathematics.
Okay.
Masters in economics. So it gave me that, but it also then gave me the experiential learning of being in a global north, meeting different corporates, experiencing the fast world that of corporates on the other side. And I think that is something that I think it is more balanced in a way, that I have this very theory that I know very well, and then I studied a master's in that is very highly technical. That it gives me that ability that when I get into the room, I can literally look at those numbers. They don't make sense. Because when I want to interpret those numbers to a person who understands finance, they'll tell you, look, you can't have an efficient frontier that is this, and those type of concepts.
Sure.
Yeah. So I think that was the balance that it gives me, and I think more so now, it's not like I'm doing everything that I learned in the textbook in grade school. No, it's more application.
Application.
It's
Yes,
just
it's more
application, practical application, and just purely immersing yourself. And at the end of the day, you are more interested in saying, how do we then translate all this to a person in the street who is working and they want to retire comfortably, and you want to say, look, this is how your portfolio is looking like. The reason why it has been like this is because of 1, 2, 3, and 4.
I think I'm actually loving this conversation, and unfortunately, I'm actually realizing that I'm sort of trying to get as much information from you. I'm not thinking too much of my listeners.
Yes.
But it's okay. I think they'll understand the workforce.
Yeah.
So with that said, what makes a good senior investment specialist?
Yeah, I think, to my understanding, and this is something that I'm reflecting on it, and is that you've got to have the client at heart. You should be client centric. You should be, your focus must be the end person. You are doing your job, and you are allocating this capital. You are integrating responsible investing for a person who's hardworking, who's South African, who are not even as educated as you are. It could be somebody who works in a mine, and there you want to, one day when I retire, I want to have so much money. And that's what all they have. And I think for us, the aim is that we want to meet the needs of the client, and we want to even understand them even much better, to say, how do we provide a solution to your needs? People always comes with solutions. I'm the best investor, without understanding that the client is actually saying, no, but I want you to invest my money in a way that when I retire, I want to retire comfortably. Don't just give me the higher return. I want both the higher returns and also wanting to retire in a comfortable place. And I want my kids as well to be in a conducive environment one day when I retire, and they must go to good schools, not for them to travel 80 kilometers to go to a boarding school elsewhere, but to be right here where they are. And I think in my experience, I've come to realize that we should be able to have a better understanding of the needs of the client. And there's different clients, there's diverse clients, there's
100%.
more affluent clients that are more sophisticated like yourself, who knows about Forex. There's somebody who doesn't know about Forex, somebody who heard about it. There's someone who's somewhere in the middle. So you should be able to understand the client needs across the board, to say there are some people that are more sophisticated. They know what they want. They can do their own financial planning. And there are those that can't. And they're most, So I think what really makes one is just to make sure that they have a better understanding of the client. But I think more importantly, it's also this all-round individual skill sets that you create relationships. You know people for who they are without knowing them for business. And I think that's one thing that I've loved to appreciate. But also then your technical skills. Those are basic things you should have. Once you've studied finance and you're there, you can crunch the numbers, you can understand the risk and return profiles of different portfolios, and you can literally get to talk to people, and I think that becomes the basics of it. Once you get that and you have got the relationships and you have better understanding of the client's needs, I think you'll be successful.
Should be fine. Okay. Thank you so much for sharing that. So, what is my next question? I didn't want to touch on, because the questions that I had, I realized that we'll probably have to have a second sit down.
Yes.
Because I think I am more interested in the work that you're doing.
Yes.
Because I want to talk about inside jobs.
Yes.
Like there's this thing where, as much as there's conservative or there's aggressive, there's also things like insider trading.
Yes.
Which also, you guys in your world, you can get arrested for that.
Yes.
So I think we can actually get into that conversation maybe later on, maybe on the second sit down.
Okay.
But I think for now is what is it that you like the most about your work?
Yeah, look, I think more than anything else is the fact that I get to interact with different kinds of people. The interaction, I think, is the one that then helps me to then go back in my Lego corner and my big screens and crunch those numbers to align it to them. But I think more than anything else, it's just to have that engagement whenever I interact with a client, that they've had a best experience, that client experience, that it has been the best. That from the moment they invested the money with us to the point in which they can see how our portfolios are performing. And in the event that perhaps maybe they want to, disinvest a certain portion of their investments, the experience is smooth. I'm more interested in that smooth experience of the client, that from the onboarding to them getting the returns, to them when they, taking a portion of it. People remember on how you treat them and how you have interacted with them. And I think, for me, that's very comforting every time I
Interact with your clients.
banks. Yeah.
And then your work, right? Okay, can you advise, like you said, you work with different people from different spectrums, different backgrounds, right? Is there an advice that you can give someone in general in order for them to understand investment on a general note, if they wanted to do it for themselves?
Yeah. Disclaimer, I'm not a financial advisor.
Yes, please put the disclaimer.
And I actually work with them, so they are better equipped than me.
Sure.
But I think one thing that I can say for somebody who wants to do it for themselves is that you've got to ask yourself a question: what are you doing it for in the first place? And my approach when it comes to investing is that you, as a person, ask yourself, do I want to save money because in December I want to go to a trip somewhere where there's palm trees? Or do I want to save that in the next 3 years I want to buy a house? Or do I want to save that, one day in the next 15 years I want to retire and live in the Atlantic seaboard or in a small town? Or do I want to save for Lobola or whatever the case might be, right? Those questions that I've mentioned, those different scenarios, the approach to invest for them, they're different. If you're investing for education or retirement in the next 20 years, your approach to investing must be long-term focused.
100%.
So all this short-term volatility, you see that tomorrow the stock price is down by 5%, you should be able to stomach that because
100%.
your approach is more long-term.
Long-term, yeah.
But someone who says, I'm wanting to invest that in the next 5 years, I want to buy myself a decent house, right? You are probably going to be sort of moderate investing because you are going to withdraw your money in the next 5 years. So if there's short-term volatility, your money should be more in your conservative assets because you're going to start withdrawing it at that point in time, right? If you are wanting to go on a holiday, you should put your money in something that is a little bit conservative because all you probably need is just at least a marginal increase without losing much of your capital,
Yes.
because you say, oh, look, at least let me get something, because next year I need to be able to be December, I want to travel or I want to go to a decent holiday. And I think that is the best of, let me not say that is the best. I would like to believe that having understanding of your investment goal, it then determines your investment vehicle. And then from your investment vehicle, then it determines, okay, which asset class then you choose for you to get there. But it all comes down to, what is your investment objective? You say, okay, I want to be retiring at the age of 60. And it's the same conversation we have. Somebody who is 55 years old today, they can't put all their money in Bitcoin and Forex, things that are very volatile, right? They're closer to retirement. They now need to gradually move into more conservative assets, because they just want to say, okay, look, I want to conserve whatever I have saved for all these years of working, 100%. And this is what I want to start keeping. But you have, as a young person who's retiring in the next 30 years, you are probably going to be more aggressive now in your first accumulation. They call it accumulation period, until 5 years before retirement. That's when you gradually move into more conservative. Do you get it?
Okay. Yeah. I think I like that. So for you, the future, are you looking forward to becoming a chief investor or portfolio manager? How does your career look like?
It's a very interesting one, and the answer is I don't know yet. I'm enjoying my work so much now. I think in the fullness of time, I will see. There's more opportunities, and we live in a very evolving industry, in which, tomorrow you can head a different division. Sure. Tomorrow you can be a chief investment officer, chief sustainability officer. So as things stand now, I don't know yet. I think.
No, I totally understand, because I mean, people have different ways of going, and I mean, even pivoting. I think you said you talked about pivoting as well.
Yes.
So if you're saying that you're enjoying your work, that's also fine.
Yes.
And then I just wanted to ask maybe a side question. How is AI helping you doing your work, or is it even helping you do it?
It is. I think more than anything else, we talk about it. Technology has been more of like an enabler more than anything else. 100%. And anyone who's not jumping into that bandwagon, they're missing out.
Sure. Sure.
And you also then need to understand that even the very clients you're servicing, they're using that technology in their advantage. So for us, it really helps us to understand the analytics of how the clients are sort of, looking at our products. It also helps us even the most basic administrative stuff, minutes taking. We don't take minutes in our investment committees. This thing takes all the minutes, it consolidates it, it talks about the key, deliverables that, the action items that, okay, Shepard must be the one to do this. It does all that for us. But also we need to understand that, it's the world in which we live in.
100%.
Every time there's a new invention, it comes with its own challenges. It comes with its own flaws. Those things aren't perfect. They don't give it all the right answers. When you hear ChatGPT, it just gives you a direction. Yeah. And I think we believe that technology is there to enable us to do things better. And we are using it quite effectively.
100%. Yeah. I like that. I think you caught me there by minutes, but I like that so much. I just had some few places where I can implement that. So maybe in closing, first of all, we just want to thank you, as Tiger Podcast, for coming through and sharing your valuable career.
Yeah.
I'm just cutting it off because I'm just looking at the time as well. We're almost going into an hour of chatting. But I want to say thank you so much for coming through and sharing your career. I believe that the workforce will really appreciate this, the knowledge that you have shared with us. And your career has been really exciting, going to school, doing 2 masters, and it's encouraging for all those who are saying they want to come and do what you are doing as well. So all the best in your career, and I think when we catch up again, we'll be catching up on what are you doing at the time, and all the best. And in closing now, is what has been a recurring theme in your career, and how has it helped you?
Yeah, look, I think one of the things that has been recurring for the most part, and it just makes me to reflect a bit. I think one needs to be very flexible. You need to be very agile whenever you get to any spaces. But I cannot stress two things. Number one, it's, you've got to be able to be teachable and have the right attitude to be teachable. I think attitude spans in different ways. It spans from you being able to be teachable, being able to walk the journey with other people,
and also going to learn yourself.
Yeah.
Social.
And also then reaching out and asking questions and being interested in what other people do. But I think the second part of it, it's also then the relationship that, you meet people and you create those relationships, you warm the relationship, you make sure that you nurture the relationship. And I think for me, what I think has been very much valuable has been to understand people from where they are, right? People wants to relate to you. If you see a chief investment, don't see the role in the person, see the person. Okay. If I see you as a chief investment officer, I must understand what makes you happy. Do you cycle? Do you run? Do you play golf? And then next time when I see you, how's the golf going? And people like to talk a lot about themselves. And I think that's one thing you should like.
Sure.
Yeah, that people like talking a lot about themselves. And when they do that, what really draws them to you is the fact that you take interest in what matters to them. So if I come to you and I see you and at work and you're a chief investment officer and I saw there was a Cape Epic racing that took place of cycling, I must ask, did you do the Cape Epic? I promise you that person will light up. Yeah. Oh yes, I did. How was it? And even though you don't know the sport well, and you ask them about their families, people always want to tell you something, one or the other, about, my daughter this, my wife that, etc. And I've come to realize that that's you trying to know them from a personal level, and that helps to build the relationship. It builds the trust. It builds, the camaraderie of working together. And I think for the most part, for me, that's one thing that I've come to learn. And relationship sometimes goes south. It goes sour. Just being able to find your way, how to navigate yourself, even in those periods where it can become a bit turbulent. Yeah.
Wow. Thank you so much, sir, for coming through. I really appreciate you, and all the best in your career.
No, thank you. It just doesn't feel like an hour. Like it just feels like we've just started. I was still warming up.
No, and I saw myself, I was sort of getting excited. And unfortunately for my listeners, I was not asking many questions career-wise. I just wanted to understand your world. So that at least it helps me to understand, okay, what you guys do.
Yes.
And I just have basic information, but it's not enough. But if I'm sitting with someone, because I mean, things that you were talking about, things like RA.
Yes.
When you said RA, I wanted to actually talk more about RA.
Yes.
But I realized that we didn't even touch on RA in terms of different clients. How do you sort of see your RA? When is the right time to start doing it?
Yes.
Different RAs, can you have two RAs?
Yes.
All those kind of questions. But I realized that, okay, you know what we can do, we can actually have it in the next conversation. It will allow us to still have the conversation going and at least attack or maybe deal with one topic within the investment. But I think, Mario, I believe that this conversation was also valuable to someone who's going to listen to it. There's a lot that can come out of our conversation. But thank you so much, sir.
No, I appreciate it. No, I'm open to the next installment. I'm looking forward to it.
Yes, sir.
Thank you.
Thank you so much for listening to this episode. I appreciate you taking time and tuning in and be part of our community. We get to share ideas, stories, and perspectives through this podcast. I hope you enjoyed it and found something valuable in it. Don't forget to subscribe and share with your family and friends. I look forward to connecting with you in the next episode. Until then, take care. This is Stega Podcast signing out. See you next time.